actually just pull up the stock of South Indian Bank, and it seems to be quite interesting in terms of the numbers that they have declared. So just let me give you some perspective. Ahead of the results, the stock was up and quite strong in terms of move in the last few days. But now that we've got the numbers, the profit has come at 4.5 crores. Now their usual run rate would be close to about 100 odd crores plus. So that's the problem that has happened. And why the problem is because of provisioning. Provisioning is as high as 453 crores versus about 128 crores. This is a YOY number that I'm talking about, and that's why you've seen such a big hit as far as their numbers are concerned. If I look at the operating profits, in fact, it's looked pretty strong, 460 crores versus about 297. Now, if I come down and look at gross NPA or what's happening in terms of gross NPA estimates, so about 3.57, absolutely flat on a QOQ basis as far as their numbers on an absolute basis are concerned. There is an increase, and there is a marginal increase both in net NPA as well as the gross NPA numbers. Overall, the numbers are not looking that great, but at the same time, you have one sort of okay, the management is now joining us. Mr. Mathew, MD and CEO at South Indian Bank, is joining us. Sir, if you could just tell us about the provisioning number. Provisioning went up quite a bit. Any particular account that got written off in this quarter?
No, it is not about the write-off. I will definitely talk about the provision, but I would like to mention that the bank recorded the highest ever operating profit in this quarter. It grew by 55% YOY. And similarly, the net interest income has grown by 13% and the fee income by 92% YOY. The NIM has improved from 2.76 to 2.87. GNPA has come down by 39 basis points YOY. And similarly, if you look at the net NPA, it has come down by 20 basis points. Cost income ratio has improved from 51% to 42.6% YOY. And therefore, I would say that this is one of the strongest quarters in terms of operating performance, although we have a problem in terms of the provision that has come up as a one-time provision in respect of the ARC sales. So we had sold 1,776 crores of NPAs in March 2017 as a portfolio to an ARC.
I just wanted to say that after Q1, the comments that you gave, you said that stress from watch list are mostly completely recognized. Is it the same ARC sale or the same provisioning that you had to do?
No, the entire recognition of corporate NPAs is completely over by June 17. There is no watch list. There is nothing else after that. In March 2017, we had sold this. And this after that, the complete cleanup was completed during the first quarter of this year. So that is already completely over. As far as the corporate book, which has been posing some difficulty for the bank historically, that is concerned, that is completely over. And the last 3 years, we have not taken up any such exposures, and therefore the focus is today entirely on retail, and that part is growing very well, and that is why the operating performance is so strong today. But the sell-off happened in March 2017 as we had advised at that time, and we had sold it at a discount of 33%. So therefore our expectation was that it certainly would not require any revaluation immediately. And the presence of some accounts which subsequently got referred to the NCLT under the IBC, that has possibly led to a situation where the rating agencies which look at this kind of portfolio for evaluation may have taken a slightly adverse view in terms of recovery prospects, and therefore there is a decline of 25% on the net asset value. So that 25% on the 1,009 crore of SRs that we are holding on this portfolio comes to 252 crores, and that entire hit we have taken straight in this quarter. That is what we have.
Mr. Mathew, given that you've taken this kind of a hit this quarter, that's the reason it's been reflected in your numbers, and the stock is duly reacting as well. It's a 5% downtick. I think what investors and shareholders would also want to understand is that would you Would you say that this is just a one-time impact and going into the coming quarters things will stabilize, or do you think that we could see this continuing into the coming quarters as well, these kind of elevated provisions on account of these accounts?
This certainly cannot happen because the portfolio, as I mentioned, was sold at 33% discount, and now with a further 25% provision on that, we are having a provision of more than 50% on the portfolio. So I do not expect any such decline in value going forward. And there is no other major SR portfolio that we are holding. And therefore, there cannot be any such provision coming in going forward.
So that's a relief to hear. So I think safe to say that this is just a one-off, and in fact it has had, like Aman was saying, it has had an impact on your profits and subsequently your stock prices as well reacting. But let's get into the other internals as well. Mr. Matthews, if you could just talk to us about what your margins have been this time around versus your Q1 margins, and what exactly has driven the margins. And okay, I just want to, before I move on to margins, there's a fraud of about 28.5 crore rupees in the second quarter. If you could just give us some details in relation to that, what led to the fraud, and what exactly is this in relation to?
Hello.
Yes, Mr. Matthews, I was asking you about the margins, but I want to before that ask you about a note you have mentioned in your financials about a fraud of 28.5 crore rupees in the second quarter. What exactly, if you could just explain that to us?
Yeah, this is an irregularity that came up in one of the surprise inspections in one of the branches, where some serious irregularities, according to us, have taken place in terms of disbursement of a few loans and also the security creation. So we have already taken very strong action. We have filed an FIR and we have taken serious administrative action also internally. And we have already filed the insurance claim, and we are eligible for a claim of around 24 crores immediately on that. Meanwhile, the recovery efforts are also going on very well. As far as the NIM is concerned, this has improved on a YOY basis from 2.76 to 2.87. And even on a sequential basis, if you look at it, it was 2.80 last quarter and it is 2.87 now. In line with what we have been projecting, we have been mentioning about 2.85 for this year, and we are above that.
Right. Sir, just about the fraud question, just a follow-up. Any provisionings that have been done or will be done in the next quarter because of that?
We have done the provisioning. We are eligible to take it in 4 quarters. We have just done that. We have taken one-fourth of that this quarter. Yes.
Just a word on the retail loan as well, especially ex-gold loan. What has been the retail book growth?
The overall retail book, which I'm not talking about the MSME and Agri, which also we classify as the retail. If you look at the MSME, it has grown by 19%, and Agri has grown by 12%. So Agri and MSME together has grown by 16% on a YOY basis. Mortgages have grown by 33%, auto loans by 30%. Gold has grown only by 7.7%. So therefore, if you look at the total other retail, other than Agri and MSME, it has grown by around 18%. So if you look at the total non-corporate portfolio, that is MSME, Agri and retail put together, which constitutes 64% of the total advances, that has grown by 17%. And the corporate advances, in line with our strategy, it has grown only by 4% because we are certainly not, as I mentioned some time back, looking at very large exposures in some of the sectors particularly. So that is a position on that.
Right. And in Q2, what was the slippage number?
The total slippage in Q2 was 252 crores. That is 251 crores of fresh slippage and just about 1 crore of additional drawings. Against this, we had cash recovery of around 39 crores, upgrade of 86 crores, and write-off of 57 crores. Therefore, the total credits back is 182 crores, and the closing balance is therefore 1,766.
Right. So just the 250 crore number that you told us, when you compare it with Q1, it was as high as 600 crores plus. So it's come down substantially on a quarterly run rate basis.
Absolutely, because in March 17 quarter, we had 1,148 crores of slippage. In June 17, we had 684 crores, and we said with this, we are finished with the corporate book stress altogether, which is what we are seeing today. The 252 crore slippage actually are not from the large corporate book at all. It is, if you look at it, it's around 3 food processing accounts totaling about 102 crores, 2 trade accounts totaling about 65 crores, 1 textile manufacturing unit of about 16 crore, and there are various small accounts which is all adding up to just about 69 crores. So that is a composition. So it is certainly not from the corporate book. So we are finished with that problem altogether, and we are back on track. And even this will start coming down going forward, because we have really started a online recognition of NPAs last quarter onwards.
Yeah, and I think that is what the street would look forward to, because as of now, investors seem to be a little bit nervous with the number that you're seeing. But remember, the management has alluded to that 28.5 crore fraud as well at one branch and some select accounts as well, sale to ARC, and that was done.
The interesting thing was also that, they have very clearly said that they don't expect such provisioning to repeat.
Yes,
so probably
exactly.
That's also something which
should
be taken
so I'm
as
sure
a
the street would want to hear out those comments, given the kind of stark reaction you're seeing on the stock. I'll tell you what, that's South Indian Bank. We've dissected it from every angle. We'll take a quick break right here on the show. 10,013 on the index. Come right back with more.